Hello and welcome to Prime Business with me, Pius Kojobaka. Hotels in Ghana have posted some significant growth in patronage and earnings as a result of the Christmas festivities. The hotels believe this puts them way above what they recorded during the COVID-19 period. President of the Ghana Hotels Association, Dr. Edward Akanyamike Jr., tells Joy Business they are hopeful of some recovery.
We are far exceeding the COVID era. In fact, even in some cases exceeding the pre-COVID era. I mentioned some time ago that we can confidently say that we have recovered from the pandemic, we've recovered from the COVID challenges, and we are back on our feet, firmly back on our feet. So it's been good, and we can say that we can no longer make reference to the COVID era. We are moving on, and certainly the hotels are in high spirits. We usually deal with the occupancy rate, and we have some hotels recording as high as 70 to 80%. But of course, unfortunately, I got one of the feedback that talks about 40%. And I remarked that seems to be out of the normal for this period because that seems to be quite low. But generally, some have recorded 70, 60, and some as far as 80%. Great. And that's even for the accommodation use. But the F&B too has been very good, as I mentioned earlier on.
The Association of Savings and Loans Companies is upbeat the cost of borrowing in the country will be coming down from next year owing to the robustness and soundness of the financial sector. According to the association, if government's treasury bills drop, it will make their facility much cheaper, which will reduce the high non-performing loans seated in their books. Speaking to Joy Business, Executive Secretary of the Association of Savings and Loans Companies, Jinibua Kodia Boache, expressed their commitment to support small and medium-sized enterprises.
We are very optimistic that certain foundations that have been laid in the banking sector, especially in the savings and loan sector, which has enabled us to grow this year, 2024, we will continue in that growth. Number two, we are expecting that businesses will do better by also when they take facilities, they will pay. Our projection is that interest rates will come down, especially government borrowing. If treasury bill rates come down, it makes our facilities cheaper and households are able to pay on time. As it stands now, savings and loans, our NPL is around 15-16%. So this 15-16%, as of September, it was 15.88%. We are expecting that we will work with our customers, they will pay their loans, they will do business with us, and then we will be able to continue to grow with them. And we stand ready to support all businesses, and we know that the nation will continue to work again.
Now, government recorded about 9.0% of its treasury bill sales barely a week after it recorded a marginal undersubscription. Interest rates, however, hit the 30% mark with just a few days to end the year. There is more in this report.
The government got 4.65 billion cedis against the target of 4.262 billion cedis. All the bids tendered for the short-term instrument were accepted. A chunk of the bids came from the 91-day bill, in which 3.83 billion cedis were received. This represented 82.6% of the total bids tendered. About 628 million cedis were received for the 182-day bill. For the 364-day bill, 179.37 million cedis were tendered. Meanwhile, interest rates hit the 30% mark. The yield on the 364-day bill surged to 30.07% from 29.95% the preceding week. VAT of the 91-day bill increased by 18 basis points to 28.03%. Similarly, the 182-day bill's rate went up to 28.68% from 28.57% the prior week. Importantly, investor demand for the T-bills increased by 27.2% month-on-month in November 2024, but remained insufficient to fully cover the high auction target for the month under review.
More within the financial space, the Bank of Ghana is taking some fresh measures to help reduce risk associated with transactions carried out by other financial institutions. It is also to this end the central bank has released the draft regulations of exposure directive. There is more in this report.
The Bank of Ghana by this release is seeking public views on this draft before it becomes the new set of regulations guiding the activities of other financial institutions like savings and loans. However, this exposure directive is not seeking to regulate the activities of commercial banks in the country. The Bank of Ghana in the draft document, for instance, want to limit the maximum losses that regulated financial institutions can incur in the event of sudden failure of counterparty transactions, or what the Bank of Ghana describes as connected parties. This, the regulator believes, will go a long way to ensure that it does not endanger these institutions going forward. The Bank of Ghana by this move is also working to ensure that there is an established framework for large financial transactions that could be tied to the capital requirement of each firm. The regulator is also proposing that there should be some limit on the amount that the specialized deposit-taking institutions can hold. The central bank by this draft regulation is also seeking to let these firms focus on lending to small and medium-sized enterprises that will help in aiding the growth of the sector.